Well, it's only a couple of days before Thanksgiving Day as we sit here to talk about value stocks. And I would imagine that our value strategist, Tracey Ryniec, is thankful that she was able to find a couple. She's with me now. You've told me it's been difficult.
It's awful. I mean, I'm glad that the stock market's at record highs and, we keep hitting these new records every day. But if you're a value investor, it's pretty slim pickings out there.
Yeah, well, here, let's run down these.
Yeah.
ACCO Brands, they make branded products, right?
Yeah, they are, spiral notebooks and things like that,
Okay.
School supplies, office supplies. You think, is anyone using school
Spiral
supplies anymore?
notebooks.
Doesn't everyone just have tablets? That's
Right.
kind of what I thought. But, I spent some time over the last weekend with a bunch of teenagers, and they opened up the backpack, and out come the various notebooks and things like that. That hasn't changed.
Okay.
They actually had a really good back-to-school season, so this last quarter was really good for them. They beat on the Zacks consensus, and they raised guidance for the full year off of this good quarter, and you can see the estimates starting to trend up here, which is why it's got the Zacks #1 rank.
Mm-hmm.
Now, the thing about them is, as you can imagine, it's not exactly a really high growth type of thing.
Industry.
Yeah, I mean, earnings are expected to grow about 4% this year, maybe 3.5% next year. So you're not really getting a growth company with them.
So that's important. So where does the value lie then?
Well, the value is in the earnings are going up and it's still cheap. It's only trading at 11 times.
Okay.
So certainly compared to the overall market, which is getting close to about 18 times the S&P 500 is,
Yeah.
that 11 times is cheap. But that's also because this is kind of an area that people aren't exactly enthused about. Office supplies and book school supplies.
Right.
And you can see that in this chart here I put up the last year. I mean, the stock was doing nothing. It was just kind of trending along. But this good quarter, got some people excited. It has jumped here, but the shares are still cheap. I do like it as a value stock, but you're not really going to get like the big growth that I normally look for.
Okay. So in a similar vein, speaking of spiral notebooks, On Assignment is another company that you've outlined here.
Yes.
Global provider of in-demand skilled professionals in key sectors.
Yeah, these are the staffing agencies, and they are heavy into like healthcare, so doctors, nurses, healthcare IT professionals. So they have these really niche areas. People are hiring again, so these staffing companies have really seen their earnings jump. They're seeing it both in the temporary and the full, permanent hires.
Mm-hmm.
On Assignment's had a few little bumps in the road because healthcare has been really strong. They're seeing a little bit of weakness in the healthcare going into the end of this year and maybe beginning next year, and that's in like the healthcare IT area in particular.
Mm-hmm.
That's about 16% of their revenue. So some of the analysts are a little bit more, iffy on them just in the short term. But you can see the estimates really jumping here. They also had a very nice quarter this last quarter. Earnings are expected to jump 70% this year. That's like the complete opposite from ACCO that we just saw. But slowing down next year because they're not sure what's going to happen with the healthcare market. They're also switching from supplying workers to more of the larger companies. That's who they've been heavily, most of their customers are on the large side, over 250 employees. They're trying to go back into the smaller side because there is a lot of business with the small companies, and that's who's starting to hire a lot more right now. So small, mid companies, they're making a push into that. So we'll see if that matters in this next couple quarters for them. But again, this company had a big sell-off because people weren't sure what was happening with the healthcare hiring area. It started to rebound here, so shares are a little cheaper than they have been. They're trading around 15 times. That's not the cheapest I've ever seen. It's right around where my cutoff would be for a value stock. But given the growth that you're getting with this company and the outlook for hiring just in general, I do like the staffing companies. So.
Okay, well, do you own either of these?
I do not.
All right, check out other stock picks and stock picking strategies and interesting commentary on stock companies over at Zacks.com. You can link to it all right off the homepage. With Tracey, I'm Terry Ruffalo.